indications now, I believe, are between $78 and $81 a share, priced at 42. I see the stocks certificates, I believe, on the wall behind you. You've been at Oracle. You sold Siebel Systems to Oracle 15 years ago for just shy of $6 billion. If C3.ai opens at these levels, its market cap will be around $8 billion. Talk about the significance of all this.
Well, you know, the markets will do what the market will do. I think this is a financing event for C3 to enable us to meet the needs of rapidly expanding demand for what we do. It's good that the markets are open again, and we're very pleased to be able to participate. I think this is a great testament to the work that the employees of C3 have done in the last decade, and now we're ready to expand this business at global scale.
Tom, we were talking on Squawk Alley toward the beginning of this pandemic about the challenge that it presented to Silicon Valley, to innovation. Did you think at that time that there was any way that you would be doing an IPO this year? And what have you seen from your peers and investors in Silicon Valley that allows this to come to pass?
Yeah, John, I remember the conversation very well, and no way, no how. If we look back at February, March, April, I thought capital markets would be closed for a long time, like the recessions that we saw in 1980, 1990, 2008. I thought this is something that would last for some years, but nobody could have anticipated the extent of fiscal and monetary stimulus that turned this around, and the PPP program, that turned this around. And so we get into June, July, August, and everything is just blowing and going, and markets are open, particularly as it relates to technology stocks related to distance work, digital transformation, artificial intelligence, and that just happens to be our neighborhood.
As long as we're comparing eras or epochs, and this has been talked about for a while now. How is this different from late 90s, early 2000s? Are there any warning flags or signals that you at least are thinking about?
Well, I think there's no similarity, really. I mean, if you think about Oracle went public in 1986 off of trailing revenues of $12 million. Siebel Systems went public in 1996 off of trailing revenues of, I think, $8 million. Today, we see companies going off, where trailing revenues are an order of magnitude larger than that. So it's an entirely different game. And these companies are generating cash. These are companies like C3.ai that I believe is a structurally profitable, structurally cash positive business. And, we didn't have the we didn't have the activity of, monetary policy like we do today that clearly changes everything.
Hey, Tom, it's Deirdre. Also, I just want to note that the indicated range now is $81 to $84 per share. As you talk about the differences, something else that we spent a lot of time talking about this year that's been different is sort of the role of the younger retail so-called Robinhood investor that are very interested in next generation technologies like artificial intelligence. How do you see them playing into the value proposition, sort of the share price going forward?
It's a phenomenon. It's a great question, Deirdre. It's a phenomenon that I don't understand, this new kind of COVID retail market. I hope these people are being careful, and I hope they're being cautious, and I hope they don't get hurt. But I say it's not something that I understand. I'm just not an expert at it.
Shepard Smith here. Thanks for watching CNBC on YouTube.